Good afternoon, everyone. I think we can start. Today we are going through international stock trading. As we have said before, Wednesdays is NSC share trading. Fridays is international stock trading. So today we run how to select and manage international stocks as a beginner. Remember, when you're getting into a market, you need some basics. And one of them is a way of tracking shares that are trading through maybe a watch list you create today, and also portfolio management and dividend management. All these you can use either Excel, but today we will use a Google Sheet, that's a spreadsheet. I'll show you how you can do it. For international stocks, apparently you can automate everything. There are formulas you can use to automate everything. NSC, due to their data restriction, you may not be able to do what you do today. For NSC, you need to do manually what we did last week and what we'll do next Wednesday. So next Wednesday, we'll complete on that Excel workbook we were working on Wednesday, and train you basically how to manage your portfolio of our system. The reason is, as you know, dividends are paid to you. If you don't account for that in your portfolio, you may think you're making losses, yet you have made profits through dividends. So you need a way of tracking that. Also, how to get recommendations without having to rely with research teams, where you can automate Excel to do that for you, to recommend stocks to buy. For international stocks, that is possible. We'll do that today. Hopefully, before the end of this session, you have covered everything. I want to go through quickly through the theory part. Then we go to the practicals. Hopefully, you run something. So there is my WhatsApp number, just in case you want to reach out to me. I've also given my office email. The reason why I've given my Gmail, some of the things you do here, maybe see them outside the IB or even in any other broker. So if you may want more details on that, you can reach out either on my personal email or on my office email. But all of them, they help you trading in international markets. If you also do Forex, or if you do anything related to Forex exchange, I will also show you at the end how you can take advantage. Everything you're automating, everything you're automating through Google Sheets. If you don't know how to use Excel, at least today we'll go into basics so that you can start doing these things on your own. So allow me to start, unless there is any question before we start. I will share recording. I think there are those who have requested. For Wednesday, I'm still editing. Once I'm done, I'll share. Even this one, I'll share over the weekend. So let's go to our presentation. So today, let's start with how to choose a right international stock. So, as we said with NSE, you need to choose a good stock that gives you returns. This is the same thing in international markets. You need to choose a good stock. Otherwise, you might buy a stock that will never give you returns. And remember, in NSE and international stocks, if you're taking shares that are not giving you dividend, you can only make money by selling. If you're taking any shares that are giving you dividend, then you don't need to sell, because you are receiving that income directly without having to sell. So why then do you pick right stocks? One of them, it protects your investment. Remember, you're putting money in. This money, maybe you could have used in other areas, maybe in other investments, or maybe paying for some, maybe education for yourself or for your kid. Remember, losing this money at NSC, it's a huge loss to you. So choosing the right stock matters a lot. If you look at what is happening in NSE, you find there are stocks which are suspended. You have bought shares, they are suspended, you can't trade. You don't want that to happen to you, even in international markets. You don't want to invest in a stock, then after some time it is delisted. While you may not lose money, remember the funds you have invested have stayed in that stock for some time without earning you any returns. Again, you need to look for good companies that might withstand downturns. A good example, we have seen and you have heard NVIDIA is one of very volatile stock in international markets. At times it goes down with a very huge margin, then it shoots up above even the price you had bought it. You need to invest in such stocks which are able to withstand whenever there is an issue. If they are affected and prices go down, they are able to recover. We have had various changes in US government. Trump, then Biden, then there was Trump before, and each comes with their own policies. Remember, these policies will affect these companies. So if you don't pick good stocks, when they're affected by Trump policies, then you have to wait for his presidency to end. And you don't know the next president will come with what policies. Unfortunately for Kenya, it's the other way around. It's us who affect the companies. Whenever there is any political hit, we actually play a very great role in affecting those companies, because we end up in streets. Most of the companies end up shutting down. They are making losses. What if we do what US does? You don't go to streets. These companies will still operate. So that's the difference between international stocks and our market. Choosing a good international stocks share will help you withstand wherever there is a market downturn. Because when the market improves, then you make your gains. Then strong picks will lead to long-term wealth creation. If you're picking stocks that are giving you dividend and growth stocks, remember, stocks that are giving dividend, some of them are also growth stocks. Growth stocks are those that appreciate in price over time. So you buy a share, you put it in your account. Remember, you have converted your cash into shareholding of another company. This is different with what happens in Forex. Here you are having an ownership in a company. When prices go up, your value goes up. When prices go down, the value goes down. But that does not mean you are losing. Remember, there is no way a company value can go to zero. If it goes to zero, then it is desisting or it's going into bankruptcy. So buying a strong stock will help you create wealth over time. Assume you pick a stock that is giving dividend maybe quarterly in international market. So it means every quarter you're getting some money in without selling your shares. Whether price goes up or down, you're getting your dividend. Then when you want to offload those shares, you just come and sell. And I always advise, don't sell a counter that you have not made money. So again, if you select stocks blindly, you may end up making losses. Remember, you're putting your money in. Price moves. In international market, it's not like NSE. Price moves within a fraction of a second. You can make $100 in 1 minute, but also lose that $100 in the next 1 minute. But you're not losing because you're not sold. For those who have seen the reports we have shared, they have those green and red colors. It can turn green or red anytime, but that does not mean you are losing because you have not sold. This is not like CFD or Forex. No, you're buying ownership of a company. So if you make poor selections, you might buy a share, then price goes and stagnates at a lower price. But again, you don't need to worry in international markets. As you see near the end, there is a way you can play around with foreign exchange. very well and make very good gains. Even when it is showing on your account, you're making losses if you sell. But there is a way you can play with the exchange rate and actually convert into a profit. So you also check, so some of the things you need to check, one of them is the financial health of a company, whether this company is generating revenue and profit. Remember, when they make profit, there are chances they'll give you dividend. If their revenue are growing, remember prices will also appreciate. That's a growth stock. Then also check their balance sheet. When they announce their financials, the first thing you should check for a company is the balance sheet. Do they have debts? If they have huge debts, don't even think about it. If they have low debts, then that's a counter to consider. If they don't have debts, then get in. Then cash reserves. Check for those companies that have strong cash reserves. Then you also check cash flow, where it is coming from, whether it's coming from their own internal operations. You could see maybe cash flow is high for a company, but maybe they are being bailed out. Do you want to get into that company? They are getting load from outside. However, there's another company that's generating revenue from their own sales. It means that company is doing well. Then you use a price to earnings ratio to check if the stock is overvalued or undervalued. If it is undervalued, then buy. If it is overvalued, then you need to rethink before you get into that counter. I don't want to go into details. Ted, I'll share the screen recording for Wednesday, don't worry. I usually share all of them. Then you look for growth potential. For any company, you need to look at future growth. And you start checking for a period of the past years, how they have been performing in terms of revenue and earnings. That projects their future. Then you check whether there are innovations they are bringing in, or they have plans to enter into new markets or bring new products. That's a company to target. Good example, Tesla, moving from electric vehicles. I think they are also coming into energy solution. But again, when you're getting into Tesla, remember who owns it, and the government that is in power. If they have any issue, remember, it will also be affected. These are some of the things you need to check, but these are temporary. You never know, maybe even the owner of Tesla might decide to start for presidency. Then again, very important, you check analyst forecast. You can get that from Yahoo Finance or the site that I shown you last Friday called Stock Analysis. It's a good site. You check what other analysts are saying about that company. And you check the number of analysts before you make decision. Then dividends, if the company is giving dividend regularly. Quarterly, maybe half year or once a year. These are earnings that you get from that company while you hold your shares. You're not selling. So some of the key metrics you can check are dividend yield, that is return on stock price. That is dividend divided by current stock price. It gives you the dividend yield. Then dividend payout ratio, how much of their profit is paid out to shareholder. So you check the dividend, the total dividend they are paying out, divided by the profit they have made, then times 100. If the dividend payout ratio is high, it means this company that is giving much of its profit to shareholders, then it means it is a stable company. These are just some pointers. However, as we went through in the previous trainings, there are many other factors you need to check. So before you buy any share, both international and NSE, check its financial stability. Then if it is growing in revenue, market share, innovations and products and new markets. Also check corporate governance if there are any issues, and audit issues and tax, because those are some of things that will affect you directly as an investor. Then very important, if they offer reliable dividend, if that is your goal. Remember, you must have a goal when getting into market. Why? If you get into market without a goal, you just buy any share and sell when maybe price moves with a small. Remember, there are fees which you are paying, which might eat into your profit. Then you also check the industry it is in, whether there is growth. So the next screen is growth stocks versus dividend stocks. Growth stocks, these are stocks that appreciate in price and you gain using capital gains over time. So you buy low, you sell high. So that difference in price, which is your profit, is what is called capital gains. And most of these, they also give, you find they give some dividend. Then you have dividend stocks. These are stocks that give you dividend where you hold your stocks. You're not selling. So some of the features for growth stocks, focus is on capital appreciation. Where dividend stocks, it is on income generation. So for growth stocks, you find companies reinvest the dividend, but price moves up. For dividend stocks, the profit they make, they share with you. Then risk level for growth stocks is high because price can fluctuate either way. For dividend stock, it's lower because you're compensated with a dividend. And remember, any company giving you dividend, it means it is a stable company. Then volatility, you find growth stocks, their price tends to move very fast, and you find there is demand and supply available. For dividend stocks, you find the price movement is not that volatile. You find it moves maybe with a very small margin. Then payouts, growth stocks, you find some give dividend, some don't give. Dividend stocks, they give regularly, maybe quarterly, semi-annually, or annually. So for growth stocks, they are best for long-term investor, where you are buying with hope price will appreciate in future. For dividend stocks, it's for income-seeking investors. You want to earn regularly. You don't care where the price goes in future. And these are stocks now you pass over to your generation. They continue enjoying that dividend. So if you are young or you have enough time, you can focus on growth stocks, because it means you are looking at growing in terms of pricing. However, if you are looking at income in stock market, focus on dividend. As you have said, it is paid directly to you. Then, as an advice, always have a mix of both, a growth stock and much of your investments put on dividend stocks. And in international markets, use ETFs to diversify across both styles. Why? ETFs are made up of several stocks packaged as one. You find within that ETF, there is a share that is giving dividend. And there is another one that is not giving dividend. It's a growth stock. So it is a balance of both. So then how to choose a right ETF? We have seen how to choose a right stock. Those are shares. These are shares. Here you are talking about individual shares, where you are buying Apple, Google. Google is Alphabet. You are buying Microsoft, Meta, JP Morgan. All those are stocks. Here you are buying ETFs. What is an ETF? An ETF is a basket of assets. That is either stocks or bonds, or it could be precious metal like gold, silver, that are traded like shares. So the way it works is, for those who have not had time to come for the other presentation, you have individual shares packaged as one unit. And they are packaged in proportions. You find like NVIDIA is given maybe 30%, Apple 30%, maybe another counter 20%, like that. So a portion. Why? In international market we have fractional shares. So in ETFs it's like you're buying a fraction of Apple, a fraction of Nvidia, a fraction of Google, all of them packaged, and you're buying as one unit. So if you're buying like S&P 500, which have most of US stocks, you're buying one unit of SPY, but within that you're buying various stocks. Nvidia, Microsoft, there is Google, Alphabet, all of them there. But you don't own them directly. You're owning the ETF. So a good example, as we have done before, fruits. You can decide to buy one fruit at a time, mango, banana, orange. But you can also buy all those packaged in one. They are tied in one bag, you buy as one unit. That's what now we are calling ETF. The fruits themselves, when you're buying individually, it is the shares. When you're buying as a packaged into one, then you are buying ETF. I hope that is clear. It's very important because we have ETFs. Even I think NSE have launched one, which is yet to start trading. But don't worry, it will start trading maybe later. So ETFs, they track indexes, sectors, regions, or strategies. Like there are those that track US markets, those that track global techs, and there are those which track dividends, high dividend stocks. So when you buy an ETF that tracks high dividend stocks, it means you'll be receiving dividends. So ETFs, they help you offer diversification. Instead of buying one stock of each, maybe Nvidia in this sector, maybe another stock like JP Morgan in banking, you're buying all of them in one unit. So you have like bought different sectors using just one unit of ETF at a lower cost, because maybe you'd have bought Nvidia at a higher price, but when they are averaged, its price goes down, and so is your cost. But remember, ETF, they usually have management fee, which you don't pay directly. It's deducted when they are paying you when you're selling. And they also give you easy access to markets. Imagine buying a share in US stock market, but that share is in India or is in China. So you're accessing other stock markets directly from one country's exchange. And ETFs I did for beginners because you don't need to worry what happens with stocks inside. You are just concerned with the ETF. ETFs. Remember, ETFs, they trade same way as shares. They don't trade on a separate platform. The same way you put, I need one share of Nvidia at this price, and you pay for it, is the same way you're buying ETF. You're saying, give me one unit of SPY or QQQ or VOO at this price, then you submit the order. There is no speciality in that. Even the ETF that is coming to NSE, you just buy it the normal way you buy shares. You just click on it, see market depth, select price, put quantity and price, submit. That's it. So there are different ETFs. One of them is market index. This tracks markets. Like S&P 500 tracks US markets. NASDAQ 100 is tracks now NASDAQ. So this gives you broad exposure to major companies in either a country or an exchange. Exchange is like NSE where shares trade. Then there is a sector, which are also called thematic ETFs. They track sectors like technology, healthcare, AI, clean energy, and many more sectors. So then they focus on specific industries and mega trades. Then there is dividend stroke income ETFs. These track high dividend yields. They focus mainly on companies with strong and consistent dividend payouts. So like for example, the ETF could track by country, like S&P 500, which is for US, MSCI for China, And when to choose this, when you believe there is growth of a company or region. If let's say US, they are coming from an election and you know that the new policies which are coming will support US economy, you can go for S&P 500. If you know maybe there is for argument's sake, China, they are doing a major innovation that will overtake the world, then you can go for MSCI China ETF. Then there are those by sector, like XLK for tech, XLF for finance. This is if you want to ride industry specific trades. If you know like there is a major tech innovation, you can go for XLK. If you know there is a major change in finance rules which will affect finance, then you go for XLF in the international markets. Then there are those by strategy. Maybe you want dividend growth. There is this VIG ETF. You can buy, you'll be receiving dividend. Then there is a triple Q for growth stocks. And it depends on your goal, whether you want income or growth in terms of price. Then key factors to consider when choosing an ETF. First of all, what does that ETF track? Remember, ETF tracks an index or a sector or a theme or a country. So you need to understand what does it track. Then performance history. Is it consistent? If you go to graphs like sites like stock analysis, you can be able to expand that graph. I will open briefly to show you. Then there is a dividend yield. This is for income focused ETFs. Then you also need to check top holdings. That is the stocks that are mostly performing within that ETF, whether they are stocks maybe you know or do you be willing to buy. Then liquidity, very important. When you're buying even at NSE, always check liquidity, daily volume. That tells you whether you can easily sell or buy. Where there is a huge volume in terms of executions and also orders, there is already available demand and available supply. That's what liquidity means, so that you're able to sell. So some of common ETFs, there's SPY, which is S&P 500. It tracks US markets. So its type is a market index. Dividend is a bit low. Some of stocks could be Apple, Microsoft, and others. Even Nvidia is also there. There is also triple Q. These are growth. These targets market, that is the Nasdaq 100 and tech. Dividend is low. Some of stocks is Nvidia and Tesla. Then there is VIG. This is a dividend growth. US dividend stock. That's what it focuses on. The stocks within US market that gives dividend, and it has a medium dividend cycle. Some of the stocks is J&J. There is a Procter & Gamble. These are some of the stocks maybe you have never heard. As I said when we started this training, international markets, you have over 1,000 stocks. It's not like Kenya where you are limited to around 56. Then there is a VTI, total market for US stocks. Dividend is low and offers broad mix. Then there is a XLK, type is sector, focuses mostly on technology sector. Dividend low, and some of stocks could be Apple. And before we come to this, because now this will go into practicals, let me stop sharing. We go to stock analysis. We see some of those things we have covered. And you are so quiet on charts. I don't know whether I'm audible. Maybe you can say hi as I open that site. And if it is clear, so that I don't explain in terminologies, because what we have done so far, I think that is it. Thank you, that is enough, so that we don't override the questions. I would like when you are living here, you are independent in terms of trading. So this is one of the sites I prefer using. It's called stock analysis. I hope you can see that. I want to go to presentation. I check a few. Let's see what we can pick. I want to first pick the dividend ETF, which we have said it is VIG. So we go to the stock on the left side. You have stocks, IPOs, ETFs, and news, and all the others. So you can check individual stocks here if you're looking for shares. Stock screener, you have all the shares listed. And you can check even earnings. Remember, even dividends is shown here, financials, you have talked about balance sheet. But for us, for now, let's talk, check on ETF. We go to ETFs, then ETF screener. So here you can see all the ETFs, all these. There are many. So for me, I'm interested in the dividend one. And as you can see, we have around how many? 1,085 ETFs. It's not this one. Let me paste. So you need to be very careful when you're checking the ETFs because they are cross-listed and some of them they share names. Yeah, it is this one. Confirm. You can see that screen. Confirm on the chart. You can see that screen because that's the ETF I want us to. Let me pick one question we can hear. Which site is this one where you are checking ETFs? It's called stock analysis. There's also Yahoo Finance. The beauty of stock analysis, as you see, it has even recommendations from research. And it covers all the markets. It has so many details. Yeah, good, Patrick. Stockanalysis.com. So let's go back to this. We want to see the holdings, the stocks that are within that ETF. We have said an ETF is a makeup of many shares. Where you can buy now this VTI at a price of 309.26, just one unit. But you're owning all these stocks which are here, the holdings. You see how many holdings? 3,561 shares. And they are here, down here, all these. Microsoft, Nvidia, Apple, Microsoft, Amazon, Meta, Broadcom, Alphabet, Tesla. There is Alphabet is Google. Then you have JP Morgan, Visa, Netflix. If you are to do with the weight, notice what I said. When you are packaging an ETF, the stocks they're given a weight. That is a percentage. What portion do they make up that one unit of now VTI? Like Microsoft, it is 6.02%. In terms of shares, those are shares listed within this ETF. So I hope now it is clear. And you can see even the sectors it covers. We have said this is a dividend ETF. Let's see the dividend it gives annually, $3. Right now it is ex-dividend. It's closed in on June 30th. So if you had bought June 29th, you would have qualified for dividend. Remember, book closure is one day before ex-dividend, and that's when you need to have shares. And you can see dividend yield is 120. That is dividend divided by the price. So if you have to divide this by the 309, that is 3.71 divided by 309 times 100, you get that figure, around 1.2. Payout ratio, it means they give 30% of their profit back to shareholders. I hope now it's clear, now those terminologies. Again, you can come and see history in terms of price. I know most of you are used to Forex. This graph is very important. You don't need to do 1 minute. 1 minute it will be flat. Stock market never do 1 minute. 3 minutes it will not even make any change. It's not like forex. Year to date, you can notice they have never been that huge movement. That's why shares are very safe. Notice even after 1 year they have not been that huge movement. 5 years. Now, if you had bought in 2021, by now you have made $200. But remember, it is giving dividend. That's why these prices don't move a lot. So before you enter, you need to check. Now, like 5 years, you check how have these ETF been performing for you to enter. It could be maybe in 2021 the price was 0.9, it went down, then it is up. You need to know when it went down, what happened? Could it be a policy that affected? Then you check, can that policy be brought in back and affect the same counter, maybe at the time you're buying? So these are some of the things you check. It's not like forex where you need to expand. No, for stocks you don't need to worry about that fluctuation. So you have seen one dividend ETF which you can buy and now start receiving dividends. You only multiply this by the number of units you buy. Remember, the price here is per 1 unit. So you are buying one VTI at $309. So when you deposit, you only need to multiply the number of units you want to buy. And again, don't look at this dividend as a small dividend. I told you there is a way you can play around with foreign exchange currency. That is exchange currency. The way you can play with it and make money in these markets. Let me see if we can get another stock. We have seen a dividend one. Let's see triple Q and SPY. So triple Q. See whether we can get it. It is here. Again, the price is 231. You notice like this one is volatile. Just notice the graph. It's just a 1 day from 10 a.m. when the market opened to the time it closed. It started low, then it went up with around $2. If you compare with the other one, price didn't move a lot. And triple Q, we have said it's a growth ETF. So growth means you buy low, you sell high. Like if you bought in the morning, you can sell it in the evening and get your gains. Market opens at 4:30 p.m. our time. So if you bought at 4:30, by the time the market is closing at 11 p.m., you just exit. You have made your $2. If you look at the holdings, again, it has 106 holdings, 106. And these are the top counters. Mostly the same counters, you know. But there are some which are in the other one, the dividend one, which are not here. So we come to dividend. Notice 1.2. The dividend yield is a bit low, 0.54. Payout ratio 17%. So they give, most of them, they give a portion of their dividend. And the reason why this is a bit high, it's because within these holdings, there are some which are in the dividend one, which are giving dividend. Let's check the other one, the one that you know, SPY, S&P 500. So SPY, I believe it is, which one? This one. Yes, it's this one, S&P 500. It has around 505. And they are here holdings. Again, same stocks, but there are some which are coming in, which are not in the others. Then in terms of dividend, does it have? Let's see. It also gives a good dividend, $7. Dividend yield is around 1.14. Payout ratio, again, similar to the other dividend ETF, the VTI. And you can see even that is ex-dividend date, sorry, is June 20th. And the people who had already bought that time, their dividend will be posted in their trading account on July 31st. You can either decide to use that dividend or withdraw, but it's a small amount, so you don't need to withdraw. You can buy more stocks. So I hope on ETFs that is clear, unless there is something you want me to explain before we go now to practicals. Let me see time. Yeah, we have at least another long session now to go into practicals. So if an ETF is cross-listed, for instance this, which is cross-listed, does it perform in same manner in the listed exchange? Not really, because it depends. Like this one in Kenya is trading in Kenya shillings. In the other stock market, it might be trading with another currency. So it also depends with the volatility of that market. We may find in Kenya it won't perform well because of the price it's coming with 761 Kenya shillings. Would you buy that, or you'd use that to buy Safaricom, which is giving you dividend? So it all depends with the volatility. While it is trading in dollars, you may find the price is low because of the dollar is a bit, if you do that conversion, it may be lower. So you need to check the market. Like all these stocks which you have seen, most of them they are cross-listed. Even ETFs, you find they are cross-listed. Cross-listing means it is trading in more than one exchange. It is in NASDAQ, at the same time it is in London, New York exchange. So you need to check. Do you need a foreign currency account to trade internationally? No. If you have a Kenya shillings account, you can deposit either to our Kenya shillings account or from your Kenya shillings account to our international, to our USD account. We have two accounts in bank, that is Bank of Africa. A Kenya shillings account, if you deposit, we will convert to our USD. Or you can decide to set directly from your Kenya shillings to our USD. Or if you have an USD account, you can set directly to our USD account. But if you already have a USD account and a Kenya shillings as a client, as you see in the next few slides, there is a way you can play around with currency exchange rate and make gains. So let's proceed. Let me share screen. Where is this presentation? Let me see the other question. Do I need to open Bank of Africa account to buy? No. You are not opening another account. If you already have your account, bank account that you're transferring from. If you have M-Pesa, you can deposit directly to our BOA account using their pay bill. But we highly discourage that. It's good if you said from your bank account as a transfer to our, or you withdraw, you go and do a direct deposit. There is this question: is NASDAQ stock under S&P 500? NASDAQ is an exchange like NSE, but they have an ETF that we have just seen. Let me just check it again. It's NASDAQ 100. Actually, I've shared that slide. It is ETF that tracks that the stocks that trade within NASDAQ. So if you wanted to buy stocks and you don't know where they trade, and you go to NASDAQ 100, you check at the holdings, those stocks they trade at the NASDAQ. So there are stocks now that trade in NASDAQ. Those stocks, they are packaged into one unit. They are called NASDAQ 100. So let's proceed with the presentation. And from here, I think you see some practicals. Don't be worried. I will try to be as layman as possible, and also with understanding that we all, including myself, we don't know Excel formulas. So we come to portfolio planning. When you're buying any stock, you need to plan in advance. Which stocks are you buying? So portfolio is those assets that you hold, either shares, bonds, funds, ETFs, all of them, they are called portfolio. When you're planning your portfolio, there are things you need to avoid. One of them is hype and fear. That is when there is that, how would I call it, psych to trade in a certain stock. It might make you make big mistakes. Like now, you have heard people say Nvidia is a volatile stock. Everybody is talking about Nvidia. But as I said, Nvidia can shoot within a second to a very high price, then down to a very high, then back. If you trade with that hype, you might buy when it is high, then it goes down. You panic, you sell. So when doing portfolio planning, you prevent emotional investing based on hype and fear. We said in NSE, when investing, don't ride on emotions. What is happening out there? What people are saying? What is going on? Follow credible news. Otherwise, if you invest with emotions, you will put your money in. Remember, it's money you have put in. You're excited, you buy Microsoft. Maybe something comes. And maybe US, they introduce new policies that affect Microsoft. Price goes down. You panic, you want to sell. You're selling at a loss. And maybe that government will only be there maybe for 1 year or 2 years. Maybe a president was impeached, another one came in with policies. When the next government comes in, they support Microsoft, it shoots up. You see, you lost because of fear. Always, as we said in NSE, invest using data, fundamentals, and information. When you do portfolio planning, then you're focusing your funds towards growth, income, and safety. Remember, it's funds you're putting there, which maybe you could have used somewhere else. You focus on growing those funds, getting new income through dividends, and make sure it is safe wherever you're investing. In our case, we are always we are regulated by CMA, both products, NSE and international markets. So you are always safe. It also makes you disciplined and intentional. That is, when you start investing, there is that discipline that comes with you. Instead of using all your money, you always have that notion that part of my income I need to save. It brings in that culture of saving, which again natures discipline in how you handle your money. Then it encourages you to top up regularly. When you have that spreadsheet, I will show you. It will encourage you regularly top up and monitor results. So smart planning, it will help you avoid costly mistakes, which can lead you to making decisions that can lead to losses. For you to start in investing, always start small, but be consistent. Again, reinvest dividends, don't use it. And top up maybe monthly or quarterly, or whenever you have free cash, put it there. Then always run. Investing in stock market requires a lot of knowledge. Basic knowledge. Don't go for terminologies. Avoid terminologies, go for basics. You will find your way through stock market very simple. Then use ETFs and diversify to other sectors. So then we said there's a way you can play with currency. In stock market, international markets, remember your shares are in USD. So when you're investing internationally, you're using USD. Your returns are affected by exchange rates. The value of your profit can go up or down depending on forex movement. Remember, if you sell and you want to withdraw, if you're withdrawing in USD, then you are not affected. What if you are withdrawing in Kenya shillings? It means we are converting at the current rate. If it is high, then you get lower returns. If it is low, then you get higher returns. So strategy, and I think this is something you can start implementing. When you notice US dollar is weak against Kenya shillings, that is $1 is like, let's say 130. That is the time to deposit and buy, because you get higher USD conversion from your Kenya shillings. Then if you want to sell when dollar is strong. Why? If you sell shares now, you bought when dollar was $1 was let's say 124, and you're selling when it is 160. When we are converting, remember we are converting the amount in your USD with current rate 160. So you entered when it was 124, you converted back when it is 60. You have around around $36. If you are to multiply by 160, that gives you the gains you are making. So when investing, put money when dollar is weak. That is when Kenya shillings is strong. If you want to withdraw or sell, to withdraw into Kenya shillings, withdraw when USD is strong. What does that mean? It does not prevent you from selling when dollar is weak. You can sell when dollar is weak, but make sure you have a USD account. So you are withdrawing from our USD to your USD. Hold those funds in USD account until when USD strengthens against Kenya shillings, and now transfer from your USD account to your Kenya shillings. So that's how you can play with exchange rates. So this boosts your returns when converting back to Kenya shillings, even if you sold your stocks at a loss. So a good example, let's say January 2023, USD was 124. $1 was 124 Kenya shillings. And you invest $500. When you convert, it comes to around 62,000 Kenya shillings. So you are putting 62 Kenya shillings, converting them into $500. You buy shares. Then later down, maybe like now in July 2025, USD now strengthens against Kenya shillings. So $1 is 160, and you sell your shares or ETF, and you withdraw your $500. AIB is to pay you into Kenya shillings. So you're converting at what rate? The same amount you put 500. Remember, you put 62,000. So AIB will pay you at 160 times the 500, which is 80,000. That difference is around 18,000. You have not made any gains from the market. You sold at the same price. What if you sold at a higher price? Let's say you sold at $1,000. Again, you're withdrawing 160,000 from your 62,000 investment. A profit of around 100,000. It's not free money you can get anywhere. Even with pension, you can get that amount. From 62,000, you can get 100,000 unless you have a million or 2 million. So this is how you play with currency. And notice the example here is without any stock growth. Remember, there could be dividend. When they come in, they're in your trading account in custodian. You have not withdrawn. So when you are withdrawing even those dividends, remember you are withdrawing at current rate of 160. So I hope that is clear how you play with exchange rate. Let me see if I can pick a few questions. There is another question. I joined late today. Actually, you are not late. What I'm covering is what we had covered in the previous sessions. I was just doing a bit of introduction so that when we go to practicals, for those who are new today, they already know what we are covering. If it is lagging, maybe you can check your internet. The rest, maybe you can confirm whether there is a lag. Recording, I will share. It will be on YouTube channel. Let me share my WhatsApp channel. This is where I usually share information related to training, not research, related to training, like what we are doing. You can join that channel. Then there is a Telegram channel. Let me get that link so that for those who may want to drop early, you already have that channel. But before you drop, today there is very interesting training. Hopefully, I'll be able to cover that into details. Let me share Telegram channel. Notice they have a different name from EIB Access. You don't need to worry. I'm the one running that. And the reason why they are not on EIB, I think I explained when we started here. Most of these things I'm doing, you will not find them in NSE, some of these trainings. So I don't want to expose EIB to other markets, how would I call it, infights. You know, when you start doing some of these things, even other brokers, and they are not doing that, they start targeting you. I don't want AIB to be exposed to that. Let them know it is Peter doing it. So now we come to creating a monthly stock watch list. We have seen in stock market, you have over 1,000 stocks to choose from. Do you want to go through all of them every time you want to buy? No. You need to have a stock watch list that you can be referring to and see which shares to buy. So a watch list is like a personal list of stocks that you want to monitor. You just pick a few, maybe 5, 10, 20, 50. Those are the ones you want to monitor. Then when you have funds and they are ready and you know the prices are in your favor, you can buy. Or there is an announcement on dividend, you can buy. Without these, you'll be relying on research and also you having to log into these stock analysis and Yahoo Finance sites to check maybe daily to see if there is any announcement. But if you already have your watch list, you only need to open that, it pulls all the data for you. As I said, in international markets, information is freely available out there. It's not like NSE, where NSE trading data is limited within NSE. You have to pay for it. For international markets, it's there. If you have ever done data scrapping, and I hope when we do this, it won't be technical. I'm not using any technical terminologies today. Even the Excel formulas that we use, it's just one formula, which I will explain everything. You don't need to panic. So with the watch list, it helps you plan future buys, track market movements, and avoid impulse buying decisions. That is buying based on information you have just seen without data. Remember we said when you buy, use data, your research, and fundamentals. It keeps you focused on quality investment. You don't rely on what other people are saying. A watch list, if you are to give an example, is like a shopping list. You see that shopping list you create before you go to supermarket. But when you go to supermarket, you're not buying everything that day. You only buy when you are ready and price aligns to your goal. It's not the budget, the actual budget you are going with. It's just a shopping list you have created. I will buy all these items maybe when prices come to this price. Then why create one monthly? Market changes fast. Never be right. International markets, they move very fast. It's not like NSE. NSE, I can tell you, you can buy shares today and stay like 6 months without checking your portfolio. And when you come, prices will not have moved significantly. But international markets, even daily, you need to check so that you also review watch list so that the stocks that you had planned maybe within that stock list, if there are others which have performed well, you add. If there are others which have not performed well, you remove. Remember in the last Wednesday's training, we did how to track dividends with Excel. I'm yet to complete. I shared that Excel spreadsheet for those who already got the idea to start using it and also for your practice. But I will be adding formula so that it is fully automated. Your work is just to fill in the stocks which have given dividend, and the rest is magic. Even this we are doing for international market, it will be fully automated. There is no data, it's just codes that you key in for the stocks that you want. It pulls the rest for you automatically. So I'm preempting what we are doing today. So For the updates, you may need maybe it's price drops, because you need to plan in advance. When the prices go down, you buy. How do you know prices have gone down? If you don't have a watch list, it means you go to stock analysis every day or you have finance. Check that graph, how it is performing. But do you have that time? Maybe you don't even have that knowledge. You are not even in finance, you are in maybe another field. You lose an opportunity where you can use just simple Excel formula to pull that price, so that when it goes down, you can see without even thinking about the technical graphs. And you should never be worried about graphs. If you see a graph, even in Forex, you only need to know how to interpret that graph. Now, with the watch list we create, you don't need that graph. Unless you are maybe visual person who needs to draw those graphs. You can draw them even on that spreadsheet. Then you have earnings report, which you can use to run how the company have been making their revenue. Then dividend announcement, you don't need to log into those sites. You're just opening your spreadsheet, it pulls everything for you, and even new stocks and ETFs. There are so many formulas you can use, but today I'll just show you one formula. And it will perform the magic. So this helps you stay disciplined and take opportunities when they come. Then what do you need to include in your watch list? There are columns that we'll create. You need a ticker column. This is the symbol, like the way I've put VOO or QQQQM on stock analysis. You need that code for a stock. Those ones you already have them on stock analysis. It's just copy pasting on your Excel. Then the sector, which sector this stock is in. Then the price, current price. Then your target buy price. Remember, you want to target when you will buy. So your Excel will pull automatically the current price. Then you, when you're creating Excel, you say like for Apple, I want to buy when price goes down to $100. It is currently at maybe $200. So you are putting the current price, compare with your target price, then the Excel gives you the difference. If it has gone down to your target, then you can buy. You don't need to keep on checking that graph whether price went up or down. You're just checking the figures and you decide. And you can automate further so that when you open it, gives you just a summary. These stocks have gone down, these have gone up. Then dividend yield, because you want to focus on income generating stocks. So you need to put that and notes, whether they are earnings, news, and personal notes. So that at least in your spreadsheet, you know which are the stock, whether there are news which have come up, earnings, and there are many other fields. We'll see them. So before we come to this, so you'll be tracking current price, percentage change in price. So you're putting current price, then you subtract with your target price, then you see the percentage change to see if it's time to get to buy using the target buy price. Then notes on news and many other fields. And you can even go deeper, use color codes, so that you know green signifies I buy, red sell, blue hold. So you when you open your spreadsheet, you're just seeing the colors code. This requires a bit of VBA, Visual Basic. If you have done programming, some of this, but don't worry. You can also use Excel conditional formatting formulas to do color coding, so that you say if the price goes up by this margin, change this cell color to green. I won't do this today because I don't want to take time with the practical, because it will be intensive and I would want to answer any question you'd have. I'll create that template for you. Today I want to take you through how you can do it. If you have free time, you can do it. That's why I also gave my Gmail. You may ask why I gave my Gmail, so that when you want now to run this, you know now this is outside the AIB. If you don't want to reach me through office email, you can reach me on Gmail, or you can reach me on WhatsApp, because I would like you to learn all these and make sure you invest smartly. You can also create charts. You can also create alerts. You can also create within those Google Sheets, you can create even email alerts. You get emails. If you get access to WhatsApp API, you get notification. If you are in a group, let's say it's a chama, you are in that group, you can create this spreadsheet that sends even WhatsApp message to the group telling you it's time to buy. Then members know we are supposed to put some money in to buy. Remember when AIB we said we have several accounts. There is individual account where you open as an individual. There is joint account where you open as a spouse. There is kids account where you open joint account with your kid, and there is a group or chamas account. You just open a company account, but that chama needs to be registered. So now what tools do you need? Very simple. Google Sheets, it's free. That's why I didn't put Excel. I said Google Sheets. It's free. If you have a Gmail account, you already have Google Sheets. It's free and flexible. And you can access it anywhere. You can access it from home. You don't need to carry your laptop. On your phone, you can, as you come to your office, you can just be refreshing to see how it is performing. When you come to office, log into Google Sheets to your Gmail, refresh. And the formula that we are using, it's here. It's a Google Sheets formula. Equal sign, Google Finance, in bracket, then inside the bracket, that's why you put parameters. That's the only formula we are using. To use that formula to pull live prices, and it only works for US stocks. Why does it not work for your NSE? NSE have not published their data to the public. That's why I'm always mad with NSE. And that's why NSE, we always lag behind. Because with some of these formulas, they can allow investors to make independent decisions without relying with broker research. So that's the formula we use. And how does it function? It is a Google Sheets formula, very powerful. It lets you pull real-time and historical financial data for publicly listed stocks, ETFs, mutual funds, currencies, and even market indexes for US and some of global markets. So I'll come to demo. Let me see if there is any question. I want to come to demo. Let me see. So for those who joined late, this is where now we are starting the magic. The others was just theory. It was just theory. I like your presentation. I tried registering on your mobile platform, but your customer service is very poor, to say at least. Simon, just send me a WhatsApp message with your issue. I'll sort you out. Don't worry. Minimum amount to start with. For now, for international stocks, we are starting with $1,000 or 100,000 Kenya shillings. For subsequent top up after you do the first deposit, you can go as low as 50,000. But it's only for now up to September, because we are integrating into our DigiTrader app. That is a mobile app, AIB DigiTrader. Once you integrate, you can buy even a fraction of shares. That one, there will be no minimum. For now, it's just to control trading. You know, now with access to international markets, you open to everyone, it will overwhelm us. So Simon, my number is 0723384775 WhatsApp. Just drop me a WhatsApp message with your issue. I'll sort you out. I'm checking whether there is any other question. And sorry for that experience. Not everybody is like that. Some of us, we have attachment to the stock market in some way. Like me, I usually do even programming. As you can see, these are some of the things we'll be doing today, but this is not programming to say, because we are using basic Excel formula. So let me come back. Do you need, I'm just checking whether there's any question I've left, because now we are going into practicals. That data info, does it regard data analysis or long term? Maybe Rose, you can clarify your question. I don't get the question. Data info. With what we do with a spreadsheet, you don't need to feed in any data info. It is the spreadsheet that will automatically put for you. Your work is just to refresh. It updates everything else. And after I'm done with the presentation today, I will spend my weekend now feeding in all the formulas. I'll share it as a spreadsheet link on the WhatsApp channel and Telegram. When you get it, just create a copy so that you save on your Google Sheet. Whatever you do on that Google Sheet is now purely your spreadsheet. It's not shared with anyone else. So don't, mine will prevent you from adding data, because if you add and another person adds, it overrides. So I'll show you how to make a copy. Just make a copy, you save it on your Google Sheet account. That now becomes your own spreadsheet and you rename it accordingly. That's what you'll be using. So now, let me open Google Sheets. Minute. Let me stop sharing. Actually, let me first go through the slides so that we come to practicals. I hope I'm still sharing the presentation. Just confirm. If you can see the presentation, just say hi. Maybe you're also tired, or let me see if we are together. There is a question on Q&A. I don't want to leave that. Since US ETFs, you get dividends from dividend paying stocks, can you set instructions so that you can be receiving dividend automatically every time a certain stock in the basket pays? ETF, it doesn't pay. It's not the stocks within that ETF pays. It is the ETF as a whole that pays you. So if, let's say, dividend is to be paid on in August, you'll be paid for that one ETF, 1 unit of ETF, 1 times the dividend they have given. It's not the stocks within that ETF. If ETF have said we are giving it a dividend of $1.7, so you get 1 times $1.7, so you get $1.7 posted on your trading account. Now it is you now to make decision on what to do. When you go to fractional shares, you can be able now to use that $7 to buy a fraction of a share, because now the price will be low. But again, depending on the prices. This regards the data whispers you often share in groups. That is done by our research team. The data incentives viable on daily basis or for long term. For us, we advise on long term. If we are telling you to buy, it's long term. We highly discourage short term. As we said on Wednesday, if you are doing frequent trading, buying and selling, you're buying, selling, buy, selling, remember there is cost you are paying. Eventually, you may end up in losses. For us, we advise buy frequently. Only sell if you need money or if you have made substantial profit and that share is not giving you dividend. Only sell if you need money or the share is a growth stock that is not giving dividend. Otherwise, hold for eternity and pass that wealth to your beneficiary. We went through that last Wednesday, how you pass your wealth to your beneficiary. And I think there is already a video on the YouTube channel, my YouTube channel, not AIB. Now, advising you on how to pass your wealth. And for Wednesday, once I edit and I finish and upload, you'll be able to go through it. Okay, the one that is shared, thank you for sharing, Cynthia. This is now for NSE stocks. The one that I'm creating right now is for international stocks. So those are two different Google Sheets. I will rename this to NSE Dividend Stock Selector. Then the one that we do today, I will name it to international stocks so that it doesn't confuse you. Yeah, I've not moved anything. I just wanted to confirm that you can see the presentation. No? Let's now go quickly. So we'll do a demo with how you can put prices. So the way Google Finance formula works is you can put the ticker. Ticker is the security code or the symbol of that counter. Then attributes. What do you want to put? Prices, it could be last traded price. Then you can put start date and end date. From how long do you want to put this data? Let's say you are doing research on Apple and you need data from 2011 to date. One way you can do this is go to stock analysis, Yahoo Finance, you key in data manually. But with the start date, you can with just a click, it pulls everything for you. Then interval and many other flags. These are called flags for those who know programming. And attributes and also variables. So you put them in this formula. So let's do a small example with Google Finance. We'll put 2 stocks. So you note the formula. So I'll put for 2 stocks or 3 so that you don't say I'm putting from my maybe a background Excel I've put there. So let me stop sharing. Let me share that window. Let me see where it is. It's this one. Huh? So I've not opened anything. Right now, it's the blank website. Just confirm you can see Google search. Just confirm that's what you can see. Good. Let's go back. So I want to open Google Sheets. It's actually here. So you click on Google Sheets, link, then make sure you're logged into your Gmail, then you sign in. I'm already signed in. Don't worry if you can see this. There's nothing you can do. My account is fully protected. So we start with a blank spreadsheet. Don't worry, don't try to, if you have a computer, you can try to do together. If you don't have, don't worry, I will share this recording. So you click on blank spreadsheet. The first thing, always rename your spreadsheet. Where it says untitled, let's call this International Stocks. I'll just call it that way. Why? If you have your watch list and portfolio manager, like the one we do for NSE, and dividend tracker. There are so many things you can do in stock market. After we do this, you realize NSE would be a very small unit. I wish they can do some of the things that you do today. So now I want to plug in that formula. Let me just pick it, Google Finance. So let me type somewhere you can see. I want to put prices for some stocks. Let me open stock analysis so that we can pick some codes. We go to stock screener. Let's arrange them by stock price. I want to pick just one. We confirm, like Barclays is BSC. So you put the price of BSC, that's Barclays. Let's take another one, like Nvidia. Or let me pick from your chart. Just give me a few counters you'd want me to pick. I would pick top 5. Just type the counter that you'd want in international markets. Okay, Microsoft. So those are enough. For let me see how many. 1, 2, 3, 4, 5. Let's pick those ones. Huh? So we pick Microsoft. Let's see the code for Microsoft. Yeah. I only need the code. Huh? Microsoft. Sorry. It's here. It's MSFT. MSFT. Then the other one is Tesla. It's TSRA. Then we have Apple. I know these codes, but I want to write so that you can see how you get your codes. APR, that's Apple. Then we have Amazon. Amazon. It's AMZN. Then the last one. Okay. There is Barclays, DSC, BCS. Huh? Okay, I'll check these. Let me confirm. Then there is Apple. Apple I've picked. Then Coca-Cola. Coca-Cola is KO. Coca-Cola is KO. So I'll pick those. Let's go to our spreadsheet. I put them. So these, let me confirm. Barclays is okay. Thank you. It's BCS. In capital letters, BCS. Let me see if I can zoom in. I want to make sure it is visible on your side. So we have BCS, we have KO for Coca-Cola, we have APR for Apple, MSFT, then there is TSRA, Tesla, then we have Amazon. So our formula, we start with equal sign, then GOOGLEFINANCE. Then you open brackets, make sure that opening bracket is there, double quotes, then the code BCS. Close the quotes, close, then you press enter. Just loaded the price. Let's see whether it is 19. It's 1901. 1901. I didn't do anything. Let's first pick the price for Coca-Cola. It's 70.59. So again, equals GOOGLEFINANCE, open, then double quotes, the code KO, close the quote, close the bracket. 70.59. Now you can even go further and say equals GOOGLEFINANCE. You can see it's already a formula on Google Sheet. Instead of now using open quote, then the name, you just click on the code. Then you close your bracket, enter. Again, Apple, let's confirm. That's why I said I want to go basics. Apple, let's confirm, 210. That price we have, 210. The beauty with Excel, sorry, let me return this. Confirm you can still see the Excel. Confirm you can see the Excel. I accidentally removed it from the tab. Oh, okay. So the beauty with Excel, you can just type this formula and just drag it down. It will fit for the rest. And that's it. Let's check Microsoft MSFT 511. So that way you have pulled the prices. So here we can call this the ticker. Remember we had our checklist, what you need in your tracker, but this we can also, for now, let's call it a ticker name. It's the name of the stock, but this is a code for the stock. Then we have prices. This is current price. The next column, you can call it target price. What price do you want to target? Target by price. You have already put the current prices. So you can say maybe Barclays, I'll buy when it goes to $18. These we are putting manually, the target prices. Coca-Cola, I can buy when it goes down to $60. Apple, maybe it is highly liquid and volatile. Maybe I can buy when it goes to $150. Microsoft, with their technology, you didn't expect it to follow down that much. Maybe when it goes to 500. Tesla, again, with their innovations and whatever they are doing with the Trump, maybe I can buy when it goes to 200. Let me scroll it up. Let me close these. So when it goes to 300, I can buy. Then this other one, maybe when it goes to 200. Then I can just use basic Excel formula. Here is, maybe you can call these, I want to use a layman language. This maybe, how would I call it? I want to use it as a percentage. Let's call it rate. But here is maybe percentage change. Let's call it percentage change so that is clear. Percentage change. So here you just say this cell, that is my target price minus my current price in brackets. Then convert this into percentage. So I want when these figures in the percentage change, when they go to positive, because it means the price has gone down below your target price, or when it is zero, that's when I buy. I hope you get analogy. You can change this into 2 decimals so that it doesn't confuse. So that, then here is decision. Again, Excel formula equals bracket. If this, if I put the wrong thing, let me delete that. If bracket this is less or equal to 0, you tell me it's a buy. Again, else, don't be concerned about the formulas. These are just Excel formulas. Else, wait. This is just example. When I share the final spreadsheet, it will have all the decisions you can make. Sorry, not less, it's more, because it has to be positive for you to buy. It's already negative. So you have all of them. When you open your Excel spreadsheet, all of them will be weight. What happens when you pull the next time when you refresh your spreadsheet? Remember, when you refresh here, it pulls in the current price. What if it pulls a 10 price? You see, it changes to buy, without you needing to do anything. If you refresh again, maybe for Microsoft, it has gone to 500. That's what the price have been pulled. These I'm just doing manually. It tells you to buy. You see, you're not relying on reading so many information. You have already automated pulling current price. You have your target price. Target price you put in manually. Then these you just put conditional formatting. After you do now the rate, you do conditional formatting for Excel to give you different decisions. So that's how you use that formula. Let's go back to presentation. We see more. And I hope it's not becoming scary. There is nothing to be scared about. If you have any question, you can let me know on the chat. And let me confirm whether we are still together. We still have some more. We have we had put up to 3 p.m. We still have another 1 hour. Is it clear up to there? Maybe let me see. Good. Let's go back to presentation. Now we see what you can do with those formulas. And these, remember, you can't do with NSE. That's why for NSE, if they made their data available, then you can use some of these formulas. So we have seen how to pull current price. These are some of the attributes that you can pull. You can pull current trading price. It has a delay of 20 minutes, but that should not worry you. Then the price the counter opened with. Like now, let's go to our spreadsheet. I will pick, I can pick the price it opened with. Then what else? Price, open. I want to show you how now you can make decisions. Then you don't need the rest. Maybe volume, because you need to know volatility, whether that counter is volatile. Then earning per share, EPS. Then price to earnings, PE ratio. Volatility, we can pick beta. Then do we need closing for now? No. Percentage change from previous, yes. And name, if you want to have the specific name. Then trading currency. There are those people who have been asking whether a counter is trading in euro or what. Let's go back to our Excel. We are putting for the same stocks. Let me share that. Confirm you can see that spreadsheet. Just confirm you can see the spreadsheet. Okay. So now I want us to add another column. Here we can call it name. So we add the name. Then price open. That's the price it opened with. Then we can skip volume because we already have beta. So beta, this is volatility. Then PE ratio. Then EPS. And currency. Let me just pick those ones for now. Because of time, I would want to cover everything. So again, we go to our formula. If you are putting name, it's equals GOOGLEFINANCE. The first thing you need to put is the code of that security. So backtrace. Then comma, you don't need to type it, you only reference to the ticker. Opening, then name in small letters. Then close and close bracket. It loads the name. I can copy this formula so that I don't keep on repeating. For programmers, you know, we don't like typing a lot. I'll just put it here, change to the next one. To price, open, enter. Then beta. This is the beauty of Excel. You're just copy pasting the formulas. 1.1, this is a volatility. Then PE ratio, see whether this it can pick. Done. EPS. I'm just changing the formula. I'm just typing the formula here on top. Then I change to the code. EPS for. There you have earnings per share, then currency. Then the magic, we select all of these, just drag, then drag down. The magic happens. The only work I would need to do as an investor is come and refresh. When I refresh, it pulls new data. I hope you notice when I refresh, so when you open your spreadsheet, it will feed in data automatically. So your work is just to scroll. So I hope you have seen now how you can do with Excel. Now remember up here we had said percentage change. You can actually use price open and current price to see if counter have traded that day. Let's do that. This the current price, so that you know whether the price is going down. Current price minus price open. So you can drag this down so that you know how the counter have performed for the day from the time it opened to the time you are putting data. Why is this important? You may be a day trader and you want to know whether the prices are moving. If it is positive, it means the counter price have gone up. If it is negative, price will have gone down. Like now, if I wanted to buy this counter, what it is, let's see, Microsoft. Hopefully I have not changed the formula. If I wanted to buy Microsoft, I can buy because it has gone down with $5 with expectation maybe in future it will go up with maybe 5 or 10. So that way you can tell a counter that is volatile within the day, highly volatile counters in terms of price. If the movement is that huge, you know that counter is very volatile. And if it goes down with a huge margin, chances are that it can go up with that same huge margin. So if you're a day trader, when we go to day trader, you can use now your Excel to do day trading. Let's go back to presentation. Kamau, you're saying technology. Yes, it is technology, but let me share that. And don't worry about these terminologies and formulas. If there is nothing you understand, including how to use Excel, kindly reach out on WhatsApp. I'll take you through everything. I would like you do these things on your own. Let's go to the next one. You can also get historical data. Let's get for our shares. So we are getting, the first thing we are getting is the name of the ticker, close, that is the closing price, then the date, the age, then we'll do weekly. We see if we can put that. Let's see whether we can put that, because it's very important. Where did you study, bro? Don't worry, Nairobi University. Actually, you'll be shocked, my degree. It has nothing to do with what I'm doing here. I did BSc Mathematics, BSc General with Mathematics option, and some IT. It needs to be compulsory, maybe in CBC. You know, we'll be charged by our kids very soon. That's why I said on Wednesday, start introducing your children to computer. They start running these things. By the time they grow up, you'll be shocked what they can do. Now I want to pull this information we have seen. Picking that formula. So equals Google Finance. Then our code, let me scroll to this side. And don't use the name, you're using the code, the ticker. And let's go back to the formula. Comma. Here we first put closing price, close, in small letters. But you don't need to be technical to understand these things. Then we need the date. Let me see the date format. Then date. So this one you write in capital, date, in comma, the year, we can go to 2011, comma, maybe 11, that is November. Then we take the other date, the current, we can use the current date. So date, today's date is 2025. It is when 07/18. So that's one formula. Then comma, there is the last flag which says weekly. We can pick, let's pick weekly so that it doesn't take time. And this one will take some time. Let me take from January to date, 2025. Let me pick from the first of this month, because it will take some time, or we take from 14th. Then enter. So not applicable. Oh, it was weekly. 01. You see, like now it has picked for weekly for the last week, but one. That is last week and this week. The average closing price. So you have the date and the close, because we are picking the closing prices. So you can pick even historical data. Let's go back. And if you have any question, put on the chat. Don't go today with any question. As I said, you can also use this formula now to play around with the exchange rate. You can see the formula there. Still, Google Finance. You can get the current rate of USD, cash, and even daily. If like the same way we have done historical. Let's say you want to get the historical data of USD against Kenya or USD against Euro. You can use the last formula where you're giving the USD to currency pair. Then you are picking the price, because you need the price, then the date rate, and you can give it daily. Like if you are doing Forex, this one way you can pick it on Excel. I said you can use this to track, but as we want to use USD cash to see how we can make decisions on withdraw from our international account. Let me share Excel. So I will create this Excel spreadsheet for you, so you don't need to worry. You just pay attention. So we want to know, if I sell today and I want to be paid, would I get gains through USD conversion? So here we can call it USD cash. So again, we use our formula, Google Finance. For double quotes, then USD cash cruise. Just put for today. Somebody maybe can confirm. USD to cash. I've not done any magic. That is the figure, and that's the figure we have here. Remember, there is a delay in minutes. Then if you are to do this, you do it to 4 digits. That's what we have here. I've not pulled from any other site I've put there. So now using our spreadsheet, you have sold your shares. Let's say I had for each counter, maybe I bought shares. It could be ETFs or shares. You put the same information the same way. 5 units, 2, 3, 1, 9, and 1. The reason why I have put those, you may ask what is the minimum number of shares you can buy. I said it's 1 share in international markets. So how much would I be paid in USD? If I sell, equals my shares times the number of shares I have, times the current price. Sorry. Let's use the opening price for today, or we use the closing, the current price. Let me just use the current price equals the number of shares times, where is the current price? Current, it is here, the one we are putting automatically. Then I would need to drag for all of them down. Sorry. Drag down. Let me also update this formula because there are those that I put manually. Let me just put equals Google Finance. I'm just updating what I put manually. Equals Google Finance that. So I've updated all my prices, so the stocks should have updated. So on this side, I can have totals. Let me scroll down. There is that automated formula for getting totals without having to calculate. Where is it? Should be at should be on this side. It's there at the end. This one that looks like a bracket here. Then you click sum. Sum for sum. Let me delete this. Sorry. I didn't put the range of the sales. So sum. This is not like the Excel we are used to. You have to drag. So this is the amount I'll get in dollars. So this is sitting in my international stocks. The dollar have gone to 129. I might decide whether I want to withdraw or not. How then do you decide that? You do a conversion here. Equals the amount in dollars here times, you can just pick one because of all of them, they have the same figure. So this is the amount I can get in Kenya shillings. Let me put decimals so that it looks presentable. I think I can first ignore that for now because it might take some time. Let me see. Financial accounting, so that it has that figure. But this is in Kenya shillings. It's not in dollars. Ignore that euro sign. So every time you put in data, it is refreshing your USD, refreshing the current price, and you have your number of shares. So every time you refresh, you are counting your net worth if you are to sell using this column, because we have said it is number of shares times current price. Then you have done calculation and seen the amount of money you can be paid if you sell in dollars. Then you converted that in Kenya shillings. Now you have refreshed the first time, it is 129. 129. What if it goes to 1110 the dollar? The figure goes down, no? This is what I said. You buy when it is low. So you know you bought at 110. Then when you refresh your formula here, the dollar have strengthened. That means when you are withdrawing more money. Notice the difference. Here you're withdrawing 770. If you are to do with 110 as the rate, so you incurred around 610. But then when the dollar strengthens, let's undo. You see that difference of around 117,000. It's a lot of money. So that's why you need to put some of this information, and you're automating everything. The only thing you are putting manually is number of shares, because this you need to put in manually from your portfolio valuation. All the rest, including the currency shares are trading in, and it is these shares. There are those clients who have asked, what currency is this share trading in? You can put that automatically. So through this Excel spreadsheet, you can do a lot. Let's go to our presentation. And if you have any question, please put on the chat. So you have seen currency, and we come to limitations. It only works with the US and major global stocks. Unfortunately, Kenya stocks, because NSC, they have withheld that data, and there is a delay of 20 minutes, which you don't need to worry, because this is helping you make decisions. If data breaks, you only need to refresh. So let's go to the last slide, creating a real portfolio example using that spreadsheet. You can build a real portfolio, life tracking beginner stock portfolio in Google Sheets using that formula, Google Finance. So you are creating a real life tracking beginner stock portfolio. Remember, you are putting life data. It is real because you're putting from various sources on the net. You have seen even USD, it is real. The stock prices and everything is real. This is live with a delay of 20 minutes that you don't need to worry. It's beginner friendly. You don't need to read the technical graphs research to understand these, and you're creating your portfolio. How are you creating? Remember those stocks. You need to select which ones to invest in. So what are the steps of doing that? Let's assume you have the minimum, you are saying 100,000, and you want to build a portfolio. How do you do it? First of all, have a budget. How much do I want to invest in? Then have a strategy. You can have a mix of growth, dividend, and ETFs, so that you gain from capital gains, then dividends, and also ETFs through growth, and those ones that are giving dividend. The only formula you need is Google Finance and Excel spreadsheet. That's Google spreadsheet. So we can create a sample portfolio easily. So you only need the ticker, the name, the type, quantity, and buying price. Then cost. Then you put the current price using the Google Finance formula. Then you get the value of your shares. The value is quantity times buying price. Then the gains then will be your cost, your current value minus cost. So ideally, what are you creating here is your portfolio valuation. We can quickly do that because now I want to come to Q&A. So if you have questions, this is the time. So we have said we need counter name and ticker, so I can cut this or move. Let me see if I can move. Can drag and drop. Yes, it is a drag and drop. There we have the name. And I hope you can see the presentation. No, the spreadsheet. Just confirm you can see the spreadsheet. You can see the spreadsheet. Okay. Let me pick the other column. Type. We never put type. So here you can indicate type. You just insert to the left, then you put type. Then the next column you need, these are just sample. Then the quantity, we had already put quantity somewhere. The shares. So we need to move this. This is the one I need. We put it to the end, next to the type, is where it goes. There we have the quantity, we have the buying price. Do we have buying price? So do we put buying price? No. So here we can insert a column, buying price. I want to show you now how you can practically create a portfolio valuation. Huh? Sorry, it's typing the wrong things. Then you need costs. Yeah, so costs. Then current price that we have already put. Then the value now. We can leave the target price. Huh? So value now. We leave target price there, then here we can put expected profit, because in the target price now you have your expected profit. Then gains. So you have real gains. Let's put here real gains and expected gains. So you ignore the other columns, the ones that are beyond that. Expected gains. So let's see what we can pull. For the type, this one you can just put in manually. Let's go to the buying price. Let's assume back race, maybe we bought it 10. This one we bought it 80. This at 200. This at 400. I'm just putting dummy data. But when you are buying, remember you have put that data and putting in manually. You only need to copy these. Copy, and when you're pasting here, paste value. That's when you're buying. You paste special values. It will paste whatever is on this side. Now let me just change these figures a bit just to play around. 200, 400, 300, and 200. So your cost will be this times this. Then you factor commissions. I don't want to factor commissions right now, but in the spreadsheet that I will share, I will factor that. So that's the cost. Then the value now is your current price times the number of shares. Again, drag down. So your real gains will be your current value minus your cost. So those are the gains. Then target price, expected profit. Again, this equals target buying price times quantity. You're just automating everything so that you don't need to change. Sorry. Here I need to do something. You need to subtract your cost. I think I also made some mistakes somewhere. Times quantity. Actually, you don't need to multiply. Let me see, target expected profit, target buy price, real gains. So I need a column here for expected gains. Remember, this is price equals this times. I don't want to put so many formulas, they don't confuse you. This is not percentage, this is a value. So drag down, then expected profit will be the expected gain minus cost. Again, remove decimals. We have that. So you can remove this there. So again, you can track. I don't want to go into details. So you have already made your small portfolio valuation. Where you only need to come to real gains, you just do the summation. Let's go to the sum. This one. Then expected gains, you can also sum this. And value now. So you just sum whatever columns you need so that you can do comparison. Then the expected profit. I think for this other one, I will just explain. So you have the real gains and you have expected gains. I think this is wrong. Supposed to be on this. Let me remove this so that it doesn't confuse you. So you are comparing the real gains against the expected. Remember you had goals. You said, I'll sell when I get this profit. So you can compare and see, I've already surpassed my expectations. At that point, you can decide, let me offload some shares. Then you come and check which shares have I made a lot of profit. Then you can offload those. There is so much you can do with this spreadsheet. What you can see there is just a basic portfolio valuation, the one you have in BBO, in your NSC account. BBO is our back office system, and you can do so much. After I share that spreadsheet, once I complete all the formulas, you'll actually realize in international markets, you can even make decisions to buy or sell using just Google Sheets. Let's go to the next one. You can add more columns like dividend yield, volatility that is better, customer alerts. These were now you can record where there is again green, if it is a loss, red. Even add a sector so that you know where this counter belongs to. Well then, why is this powerful? You have live tracking. You are tracking your portfolio on real time. Diversification view, you can instantly see performance of your ETF against stocks, so that you know, did I make a mistake by buying ETF, or was it an advantage to me compared to buying to individual stocks? Remember, in the Excel, there's somewhere you are adding the type. If it is ETF, you are putting manually. I believe there are flags that you can put for it to put for you. There are so many flags. It's only that I didn't want to put because it's a full Excel spreadsheet. Then performance tracking. Know when to sell and when to top up. How do you know when to top up? When prices have gone down. Remember, you have the current price and opening price. Current price and opening price. If it has dipped with $10, then you know right now I can put in my money and buy. Just by using Excel spreadsheet. You don't need to keep on juggling between various screens in Yahoo Finance and stock analysis. Then currency check. If you are to combine this now with what you have done with USD, you can see your portfolio even in cash without requiring to put in US to Kenya shillings conversion manually. You're automating everything. So these are more fields that you can use that now can help you do what you have said. Know when to buy, when to sell, and when to top up. You add target price, target sell price, buy and sell signals. This you can use if formula. Then fair value estimation. What analysts are saying that you can pull or put manually, or you can do through scrapping websites. It's very simple scrapping. You just use, there is Python, that is programming. You can use Python, or you can decide to use if formulas. You don't need to know programming. You don't even need to know that Python. You can use if formula to do data scrapping. It's not hard, it's very easy. But it might be easy for me, but for you, you just run Excel formulas, that's it. Then you can even pour upside potentials to show how much upside left to fair value. Then weekly 52-week low and high. Price versus 52-week high, you can use that just to gauge how far below current price is from the recent high. Then some of these you can put in manually, or you can put pour using scrapping. Then dividend reinvestment. This you can use a checkbox using if formula, so that if the stock gives a dividend, you can pour that using again those formulas. If it gives a dividend, you can put the expected date of dividend payment, so that you know when to reinvest your dividend. And again, as I said, you can go further and automate your spreadsheet, so that when that flag for dividend date is triggered, you get an email notification, so that you don't need to be logged in. If you're a day trader or you're frequent trader, buying and selling, you can put stop loss prices. You can put that, so that when that price comes, you just get to, that trigger and exit. Trading stop losses, notes on you, add a headline next to each counter, so that you don't need to go now to Yahoo Finance, start researching, go to stock analysis, go to Google. No, you are putting that in, you're just using your Excel to read. Then the next earning date, to watch for volatility around earning time. That is when price goes up, so that you can compare. If I sell at the high price, do I gain more than waiting for dividend? So you take the price at that day, multiply by shares, then you factor cost, you have your profit. Then you take dividend times the share, you compare the profit and the dividend, which one is higher. If selling is higher, just sell. If it is dividend, wait. And with that, I think I've come to the end. There are two more topics I've not covered. If you check on the webinar description, because it would have gone way beyond our time. But that I'll do next time. So be sure to join in. Again, that's my WhatsApp number, office email, personal email. Just get in touch. Videos I will share on those two websites, to those two channels. Let me go back to Q&A. And I hope you have learned something. And I can see there are some people who are wondering which technology. Actually, it's just basic formulas, Excel. And you don't need to be technical. But basically, I will create a spreadsheet for you, do everything for you on my side, share link. Let me first go back to the spreadsheet. I show you how you will save. You know, it's wrong. I go and I have not told you how to share, to make a copy. So you just go to File. Sorry for that, it is a call. If it is anyone in this training, please, I'll call you back. So you go to File, you click Download. You can download to your laptop as Excel, but here, Make Copy. You just click Make Copy. Then you rename it. Then in your drive, you select where you are saving. Let me reduce this. You can call it, maybe, you can leave it as international stocks, or you call it your name, Peter. Then on your drive, you select, you can create a folder. Then you select where you want to save. Like I can select that. Then you can share these, as I said, during our training for NSE. Always make sure your beneficiary, your spouse, or a trusted member of family, or an administrator of your wealth knows what you are doing. This is where you can share it with them. They'll get an email where they'll be seeing what you're investing. They don't have access to your trading account, but at least now they know you have been buying international stocks. Then you click copy. It will just make a copy. Like that one, this one, and this one are two different. Why? If I make, let's say here it's Nvidia. I'm not sure whether that is the code. I'm sure this is not the code. Yeah, that's not the code. I've changed these. If I go back to this other one, it has not changed. Notice this one has Nvidia, or I can even put this as different. SPY, VU, hopefully it can load. You see, it is even putting the ETFs. VTI. Yeah, it's putting the ETFs and even their prices. It's the magic you can do. Now notice these other one have not changed. So when you make a copy, this is fully owned by you. You can do everything with it. So when I share, you just go to File, make copy, save on your drive. And from there, start investing. Let me share the presentation again so that for those who have not picked my number, and for the videos that I will upload on YouTube, I will not edit my number. It is there. So let's come to our presentation. Could you go back one slide? The page with the formulas. Let me see it's which one. Hopefully you are still on call, Anthony. Let me go back to it. Which formula? Is it this one? There is that for currency, and there is this. Just confirm before I go to Q&A. Just confirm it's which one, Anthony? The blue one. Let me see. This one, huh? That one. Okay. If you have any question, you can be asking as I pick the other questions. Even for the rest, if there's something you need, just make sure you put on the chat. Excel needs to be compulsory. I hope so from CBC. It will make our work easier, imagine. Practically, how would one determine the target price? Target price is you to come up with. You already have the current price when you're buying. You can say, see today it's trading at 150. My target price is 50% of this. So you can do a percentage. That's one way. Or if it is doubles times 2, or you pick a specific figure, maybe 180. So those are several ways. Again, you can use fundamentals and analysis. You say if a counter is giving dividend, or if it is a growth, then I can use the dividend ratio to determine my target price. So I will put the dividend ratio and multiply with the current price, then add to the current price, I get my target price. Remember that we will just give you the markup, so you need to add to the current price. So there are many ways you can come up with the target price. It's not limited. I'll try as much as I can to give the formulas that you can use for target price. I'll do that on blog post, which I will share. Then you can reference that information. Then decision is informed by so many other factors using the same spreadsheet. It's only that I didn't want to go into details of how you can do portfolio management. There are 2 more slides I removed because I realized we would go way past 3. And I didn't want to to give you more information, then a lot of information, then at the end of it doesn't help you. Already we are 3 hours into presentation. Huh? Even you might get tired. Huh? But next Friday, now we go back to this, just as a refresher, then what I didn't cover. Then what is your contact number? And do you work for AIB? Yes, I work for AIB Access. I'm Peter Chega, Head of Product Development and Innovations at AIB Access. So all the innovations you have seen, including the international stocks, anything you have seen on DigiTrader itself, auto account opening, I'm one of the champions at AIB Access. That's where I work. I know you could be asking this because of where I'm posting my videos. They are not on YouTube, AIB YouTube channel. I'm posting on my YouTube channel because they have my personal data details. If I leave AIB, I will leave details in AIB. Remember, anybody who have access to AIB account can download that video. These days, you can re-edit the video to its original. Even if I cut, they can still re-edit, get my personal details. Remember, at that time, I'm a client of AIB or elsewhere. They have my personal details. What can they do? Whatever I'm doing here, I've done using my Gmail account. With my Gmail account, I think you can wipe everything on my investments. WhatsApp, again, let me put it on the chat, but also it is on the presentation. 0723-384-775. 0723-384-775. That's my WhatsApp number. Reach to me anytime. I'm available. The key thing here is to understand the code and the formula. Ideally, you don't need to understand anything. Yeah? Anthony, you don't even need to understand everything. Yeah? If you're not technical. If you're technical, you can understand. The only thing you need to know is how to use the formula. Because you are just copying the formula and changing the codes. That's it. Ideally, the worksheet I'll give you, I am planning to put all the shares there on the first worksheet. Then another one now where you can be able to track the stocks. Huh? So I'll do everything for you. So you might need to do very small additions. Huh? I got an extra stock on my CIC shares, which are less than 100, and I didn't purchase them. How can I manage them fully? Now what you do, you just go to orders board. When you're placing order, there is somewhere you select normal. You can select ODD. Check if you can top up with the balance to make up 100. It goes back to 100. Remember, even if you buy 1 share, 2 share tomorrow, 3 share, they all add up. There is no separation between 100 multiples and 1 when it comes portfolio. They are added. So what you can do, you can add more of the rest. Like you can, if you have some money in your account, which is maybe you can't buy another counter in full, you can use that money to buy some small CIC shares. Just call our office, ask for orders board for CIC, whether they are sale orders and the orders, then you can pick those. Maybe I might have missed it. Which is the best app to download to monitor international? We don't have an app to monitor for international stock. It is a website. Just check stock analysis, Yahoo Finance, whether they have an app. I know they could have an app. Check that one, you can download. Or Market View. I know there are some which have, but if you can get for stock analysis. So thank you so much. Let's meet next time and have a nice weekend.